Welcome everyone. So glad you could join me here today. My name is Agostino and I am a real estate investor and entrepreneur. I focus primarily on multifamily, but I do also development and net lease assets as well. I've been doing this for about 20 years now, and one of the things that I've learned is operations is everything when it comes to buying property. All right, it is the way that you make cash on these deals. Buying the deal is easy, running it is hard. Okay, that's the hard part. Okay, so today we're going to talk about using creative strategies to improve your occupancy, attract tenants, and of course keep them there. Okay, because the longer a tenant stays in the unit, the more money you make over time. That's a general rule right there. Okay, so in my career, I've done about $350 million worth of real estate stuff. Okay, this includes development, this includes net lease, as I mentioned before, buying like Dollar Generals, Dollar Trees, Walgreens, stuff like that. And we've done over 1,600 units. I've coached investors on how to do this stuff as well, how to improve operations, how to get the maximum returns for their properties. Okay, and that's primarily what we do at Bulletproof Cashflow. We help people level up their multifamily game. Okay, so what we've done is help them improve their occupancy, as I said before, underwrite the right deals, picking the right markets, doing everything they need to do to improve what they're working on. Okay. If you're looking to level up, all right, hit us up. Go to themultifamilyadvantage.com if you want to know a little more about how to get started in multifamily, or you can go to multifamilyaccelerator.com if you're really already in the game and you want to level up. Now you want to start doing syndications and stuff like that. I know we're in a rather peculiar market right now. Okay, rates are certainly super high compared to what they've been before. But the thing is, though, is that there is always an opportunity somewhere. There's always an opportunity somewhere, okay? And understanding how to land those opportunities, how to put the right debt on those assets, how to raise the capital needed for those assets, how to put those deals together is extraordinarily important, okay? Not to mention, of course, running the asset, which is what we're going to talk about today, okay? So, super excited about sharing this information. So let's go ahead and just dive into how you can drive occupancy, drive some rental income, and some returns for your multifamily deals. All right. So let's talk about the first thing to talk about here, physical versus economic occupancy. All right. We have to clarify the difference between these two things. All right. Because generally speaking, people will talk about just occupancy. Okay. And it is a key metric. Occupancy is a key metric of what it is that the asset's performing, what's it doing. However, one thing you have to look at between these two is like, what's physical occupancy, okay? And this measures the percentage of the units that are physically occupied versus what's vacant on the property, okay? So to calculate this, you take the number of occupied units and divide it by the total number of units, okay? So if you have a 200 unit building and you have 10 units that are vacant, the physical occupancy would be like 190 divided by 200, so it's 95% physical occupancy, okay? So it's a snapshot of how the lease up is going with how many people are actually in the asset. Now, economic occupancy looks a little different. It's looking at the financial productivity of the asset. You're looking at how much income is coming in versus a total potential income. All right, that's what we're looking for. So let's consider that 200 unit deal again. All right, so we have a 200 unit apartment building with rents of $1,000 a month. Okay, so the gross potential of that deal is 2.4 million. How's that? It's 200 units times $1,000 a month times 12 months. Okay, so if you're looking at the actual revenue, okay, you subtract out the vacancy rate, the concessions and delinquencies, the actual revenue in this case is 2.1 million. All right, let's say for instance, right? So what does that formula look like? Okay, 2.1 million of actual income divided by the 2.4 million of potential income, so it's 87.5 of economic occupancy. So while the physical occupancy was 95%, the economic occupancy is actually 87.5 due to the lost income from vacancy. Maybe you gave out some concessions, those free rent incentives, and other collection losses you might have gone through in this example, right? So Monitoring both metrics allows you to make strategic decisions on how to maximize your revenue. You want to close that gap. Okay, so maybe you want to keep the rents as slightly below market just to get the units filled up. Okay, never change your underwriting. Always, always, always look for your background checks. Check up on the references. Call the previous landlords. Call their friends, family. Try to figure out, get an idea as to the type of person you're allowing into the unit. Okay, again, I know there's fair housing. Absolutely, you have to abide by that. But at the same time, too, keep in mind you're building a community, right? So you want to make sure that if you're going to lower the rate, understand who's moving into the asset, who's moving into that unit. Okay. Now, certainly, once you've reached maybe a 90%, you can start bringing everything back up to market and holding it there. You don't have to give up any concessions to let people into the unit. But if you're say you're lower than where you want to be, maybe you're at 80% or so. Maybe what you're doing is you're giving up some concessions. Maybe you're reducing any type of fees or anything else like that to incentivize people to move in. Okay, and you're only doing this again. You're only doing this short term. At the end of the day, you're trying to optimize the physical and economic occupancy. So you have to strike a balance between occupancy, the concession, the rental rates, and you have to tailor it to your market. This part is extremely important. Some markets that you can get away with charging an administration fee, okay? Other markets you can't, right? So the last thing you want to do is have some out-of-state management company tell you that, oh no, we need to charge an administration fee. If no one else in that market is doing such a thing, you kill that fee, right? don't do that, right? You want to keep people incentivized. You want to keep them engaged. If they're looking at your unit, you want to obviously rent it to them, right? Make sure that your application fee is aligned with what else is going on in that market. Okay, so these are the types of things that you're looking at. Okay, you're reviewing all those sorts of things. Now, let's get into some management strategies as well. So we'll review some proven management techniques to help maintain high physical and economic occupancy, okay? So one thing you could do is provide those in-demand amenities. So going above and beyond with your amenity package is a great way to boost occupancy. So renters these days, they have high expectations when it comes to community features and some in-unit upgrades as well. So look at what other communities nearby are doing and survey those types of other assets, right? Talk to the residents. They can help you identify the most sought after amenities. So maybe it's a fitness center, right? Maybe you have to have a fitness center. Maybe if you don't have a pool, then obviously that's going to rule that out. But depending on the type of asset, whether it's a C or a B or even an A class asset, then do you have a pool? Yes or no? If you do have a pool, maybe you do an upgrade on that pool if you have the cash for it. Okay. At one point, tennis courts were huge. Back in the 70s, 60s, and 70s, if anybody's bought any types of those older assets, especially in the Midwest, everybody had that stuff. You don't see that too much anymore. But if you do, try to make it look pretty, right? Clubhouses, lounge spaces, people where the community can congregate is great, and it gives a nice perk for people that say want to entertain and have a birthday party or something like that. Their unit is too small, but if you have a lounge space, it certainly is a big perk for someone, right? If you have a dog park, you have or a pet spa, maybe you have a co-working space as well. Maybe you can even offer other types of amenities like dry cleaning services, trash valet. There's all kinds of other things that you can do to even make money doing that too. Inside the units, stainless steel appliances, maybe some of those granite countertops. Granite used to be very expensive, and it's come down in price as of late. So you can still get granite countertops or other nice kitchen touches that makes the property looks really nice, makes the unit looks really nice. In-unit laundry and other smart home tech is very, very high on a renter's wish list. Okay, and some of those things is not expensive anymore like it used to be. All right. At one point, this stuff was tremendously expensive. Now you can probably order them off of eBay, like thermostats and light switches and things like that, which are fairly inexpensive, easy to install, and and offers a nice little perk for the individual living there, right? But putting together those amenities can add a strong return on your investment and also make the unit very, very sticky, is what I call it, in the sense that they're not going to be, up to bounce after the first year. You want them to stay in the unit as long as possible, because again, the more turns you have in your unit, the more it's going to cost you over time. Because every time they leave, you have to fork out some cash to redo the unit. Maybe you have to redo the flooring, paint, whatever, right? You want to try to avoid that, okay? So I had, it's funny. I was just thinking about this. We had one of our students. They upgraded their fitness center at a 200 unit community, and they did it for like $120,000. But they were able to achieve a 5% higher rental rate. So they're able to get $250,000 more in annual revenue. So the upgrade basically paid for itself in 6 months, if you think about it, right? So again, when you're putting together these amenities, don't think of it as just as a cash outlay. Think of it as an investment. If I put in, say, smart tech and my light switches and my outlets and things like that, how much can I increase the rent? How much of a benefit is that? And how fast can I recoup that investment? Okay, because again, that NOI increases the overall valuation of the asset itself. Remember, these are commercial assets sometimes, right? If you're talking bigger multifamily, and the value is determined by the NOI. You want to boost the NOI as much as possible, okay? Second thing to do is also create captivating listings, okay? Your advertising and marketing communication heavily influence a renter's and leasing decision, okay? So invest in professional photography. Get a real photographer to come in, showcase the property, showcase the units, the amenities, the community spaces in the best possible light. So this means putting together nice descriptions that speak to the local tenant, that speaks to them in the way that they want to be spoken to, so to really pull them into the door, to at least get in front of them, all right? Get them into the top of the funnel, to at least get them in the door to show them the asset, okay? What are they going to be looking for? Location, all right? This is one of the rules of real estate. You always have to have a good location, right? Locations rule, right? So you have to have walkability, depending on where the asset is, where it is on the ABCD scale, like transit access, all right? If it's like a bus stop or not, that kind of thing. Alternatively, you have access to highway as well. Any type of maybe unit configurations too, if it's going to be a studio, a 1-bed, a 2-bed, whatever the case may be. Look at the interior finishes too. And I've already talked about the tech capabilities of the units is extremely important to many, especially the young Gen Zs. They like having those types of nice tech touches, right? They really do like that kind of stuff, okay? If you have like great fitness, entertainment, pet amenities, make sure that's shared in your marketing. Talk about it. Talk about how great it is. Why should the person reading that post care? EV ports is another wave, okay, that's coming as far as electric vehicles are concerned, all right? So if you have charging stations, make sure you really highlight that, okay? Especially if you're in a market where electric vehicles are very, very popular. Now, if you don't have EV charging stations, okay, and it makes sense to have it at your apartment community, like maybe there's A and B especially type of assets, there are companies out there that will install it for you, and for very little to no cost. Depends on the program, right? And sometimes it's like what they'll do is the tenants, they're the ones that are using it. They swipe their card. They basically they pay for it, and they cut you in on a fee, right? It certainly is something for you to consider. It's a nice benefit for the tenant, so they can charge their car, because many apartment communities, like if all they have is 120 volt, it'll take forever to charge, right? But those 240 volt charging stations could be a really, really big deal. It could even be a decision making big deal for the person watching for or looking for the next place you're going to live at. All right. So the point is be sure to promote any of these types of benefits. Okay. You can also start promoting any current specials you have, incentives, offers, whatever, to attract interest. Okay. Be sure when you do that you communicate this for your entire property management team. When the special starts, when it ends, make sure that the management software has this information as well. That way it's entirely clear across the board. If you have to post a piece of paper somewhere to make sure your PMs are aware of what the specials are, do it, okay? Because I think that it'll be tremendously helpful for them when they are talking about the specials. Like, again, when they start, when they end, that kind of scenario. It's very, very important that they know that, okay? The cool thing about these days, as far as promoting and distributing your specials, is that there's so many platforms now, right? Certainly there's free places like Facebook and Craigslist and maybe even your own website. All right? If you have enough traffic going to your own website, okay? If you have that many units, you're really good with SEO. Otherwise, you have platforms like apartments.com, Zillow, the MLS. Certainly there's a cost associated with it. However, it'll get you in front of more eyes, okay? You want to maximize the exposure. So creating compelling listings that resonate with renters and communicate your property's unique value is really what you need to do to generate that leasing interest, especially if you're in a very, very, very competitive market, okay? Markets are certainly very competitive these days. There's certainly a unit shortage, but at the same time too, people have choices, okay? So you want to make sure that you're able to present your asset in the best light, okay? What's next? Proactive maintenance and upgrades. Now, the funny thing here is that nobody wants to talk about the maintenance, the hard work that goes into maintaining a very large property, okay? It's a great deal of work, okay? And the condition of the property, both inside and outside, will greatly impact your occupancy. If it doesn't look nice when you first walk in, renters will just turn around and walk away. They don't want to deal with it, right? So they're going to pass over units. They're going to pass over apartment communities, especially if they appear very dated, maybe poorly maintained. The landscaping looks terrible. They don't need to go there, right? So this means you have to implement a rigorous maintenance program and provide prompt service for any type of calls you might get when a tenant calls you for help, okay? The cool thing is that you can track all these service requests in your property management software, provided you use one. There's plenty of free software out there too, by the way, that are totally free, and it can help you manage some of these tickets, okay? It's really interesting because those systems will manage all your tickets. I think you can even program some of them to establish an SLA, a service level agreement with your tenants, meaning that if you're maybe when they first come in, you can say, look, we try to get back to you within a 24-hour period, right? If you try to respond within a 24-hour period, they know that someone cares about the asset. And response just means like that you saw their request and you're working on it, depending on the severity of the request, of course, right? But you want to try to get them situated as fast as possible. As you're turning units, make sure you conduct those deep cleanings, or, if you're just keeping the same say you have carpet, all right, you're just going to make sure that make it as clean as possible, fresh paint, that type of thing. Otherwise, replace it with the vinyl flooring. Okay, the vinyl flooring is going to get many more years out of it. Certainly, it costs more money than carpet, but in the long run, it makes more sense to spend the money up front rather than waiting. You can also get more rents too, by the way, with the LVT flooring. Okay, and fresh paint. Modern paint as well. There's this agreeable gray with the white trim. It's these days it is the modern look. Okay, and speaking of modern, you can get modern fixtures. In your kitchen and bathrooms, instead of the old chrome stuff that they used to do, now it's like a brushed nickel finish. That's still fairly popular these days. And by doing that, those things are very, very small, but will still get the slightly higher rents. Okay, because it's the details that matter. The people look at the details; they really do. I touched on curb appeal before, all right, but it is worth reiterating. Make sure the grounds look good. Make sure the landscaping looks good. Make sure that any outdoor amenities, they work, the buildings are clean, and if you have, like, say, a broken window, somebody busted a window or something like that, make sure the windows are all repaired. You mustn't make the first thing that people see look really, really bad. You know, you heard that whole thing about you never get a second chance to make a first impression. That's what I'm talking about. That's what I'm talking about right there, right? You want to make a good, positive impression as they're walking into the unit, okay? This means that you as owners are doing the same sort of thing. As you're walking up to the property, if you see cigarette butts, if you see trash or whatever the case may be, either pick it up yourself or let your crew know that, to step up their game, okay? In the end, that regular maintenance and continual improvement will indicate that you care about the property and you want a positive living experience. It's going to help attract and retain the people that are living there, the residents, okay? What else can you do? Responsive communication and service. Make sure your residents feel like they're cared for and they're being heard. So be available to respond quickly to the requests, the concerns, their questions. And what does that look like? Make sure your team is aware too that the service level agreement is not just for your community. It's also for the people that are working there as well. Like, you have to set the expectation as an owner. You have to set the expectation of what you expect from the property management company. And if the property management company is not living up to your standard, you have to help them correct it, right? You talk to the person in charge, and that can make a decision, and you set that up, okay? What else can you do? You can set up automated portals and mobile apps to facilitate work orders and facilitate more communication, provide multiple channels like email, text, phone support, multiple ways for them to submit service issues if they find any, okay? But what you're trying to do is aim to address the routine maintenance issues within 5 days, urgent ones within 24 hours. It's whenever possible, okay? The follow-up is extremely important too, to ensure that the resident is satisfied with how everything was resolved. And as an owner, you want to make sure that resolution, that you're in on those communications, okay? You want to make sure that the people there are happy, because again, this is your investment. You're running the asset, and you have to make sure that the property management team is doing what they need to do to keep the people happy, because again, every time you have a turnover, it costs you money, right? It costs you money. So you have to make sure that you're keeping the people happy. What else can you do to keep the people happy? You can do resident events. You can do like a movie night. You could do coffee hours, pool parties, things like that to build those community relationships with your tenants, okay? Why would you ever do that? I'll tell you why. Here's the thing. If the people that live in the community are friends and they're friendly to each other, and it's almost like a family, right? It becomes that much more difficult for people to leave, because they don't want to leave their new extended family. That's the reason, right? So part of it is to show appreciation for your tenants. That's important. Part of it is also to get the people that live there to form bonds with each other. So that means that if Bill in Unit 1 is friends with everyone else with Joe, Bill, and Mary in Units 4, 5, and 6, he's not going to leave, because he's got his extended family. He's got his friends there, right? And you want to help facilitate those sorts of things. This is how you do it. So it's also cool if you can send periodic appreciation gifts, maybe give them discounts to local businesses, show that you care, okay? And a lot of this stuff is very inexpensive or even no cost at all if you work with local businesses to try to get these discounts, right? Especially if it's it's a new coffee shop in town, and they already have a special going on for free coffee or whatever. What if you were able to work out a deal with them to just distribute these coupons or whatever the case may be to your entire community? How cool would that be, right? With your logo on it, right? You're watching out for them. People, they remember that, okay? But satisfied tenants will help market your units because now they can see that you care. And when they see that you care, they will market for you. How? Word of mouth, online reviews, you get those referrals. That's the cool thing. That's why staying on top of that stuff, to stay on top of the customer service aspect is tremendously important. Okay. What else is there? Strategic pricing. Okay. Set your rents based on current market data, any types of trends, comps in your submarket. Okay. You want to avoid leaving money on the table with rates that are way, way, way too low, but you also don't want to overprice too far above your competitive properties. Okay, so what does that mean? This means reviewing rates on a quarterly basis, and if there's an opportunity to make a modest increase, 3 to 5% annually, to keep pace with the market, you should go ahead and try to do it. Okay. Now, again, this is if you're over 90% and your asset's running and it's doing okay and it's fine in terms of occupancy, then you can do these types of strategies. Okay. So you want to time your increases to coincide with the lease renewals, so your current residents are not affected too. And I think we talked about this in a couple of weeks ago in another training session. Is when you are running specials, when the expirations are set to go. Like, you don't want to try to set your lease expirations in the winter season. Okay, so if you're going to do these rent increases or a special or whatever the case may be, make sure you time it properly. So you're not doing a 12-month lease starting in, say, December or November or January, right? So you want to try to time it so it's a little bit longer than that, okay? So in very hot markets with low vacancy and high demand, you want to consider a more aggressive approach, maybe a 10% increase for move-in. So again, it just depends on your market, okay? But as you're underwriting deals, by the way, when I just said 10% there, don't use it as like 10% a year forever for all the units and you project it 10 years into the future. I'm not saying that. These are strategies when you're pricing it in, depending on how popular and how hot the market is. It's never going to be 10% all the time, every time. It never is, right? There's always a change of some sort. And you want to be engaged with the market to understand what that looks like, okay? Now, if you have to make a big hike, try to do it over like a 2 to 3 year period rather than all at once, okay? Because your loyal tenants, your loyal residents won't really appreciate a giant hike all at once. They just won't, okay? Again, they'll look for an option if they get one, all right? But again, you're always checking your competition's rates, you're adjusting your pricing, maybe you use rent optimizer tools. There's some on the internet as well to maximize that income, okay? But doing active pricing management will ensure they can achieve that higher economic occupancy, okay, which is what you're looking for, all right? So now let's get into the tenant screening and leasing strategies. Now, I've talked about tenant screening before, again, on past webinars. Go to the Bulletproof Cashflow channel. All these webinars are there, they're active. Go ahead and look at them, all right? Check them out, because there's a wealth of knowledge out there that helps you really to define your strategies when it comes to leasing and tenant screening, okay? These are very, very, very important in terms of getting the asset not only running properly, but making sure that as you build a community, you're doing it properly. But in conjunction with your marketing and your general operations, tenant selection and lease terms will also impact your occupancy. So implement a rigorous screening process. It's going to minimize risk and minimize your turnover. So require that all adult occupants submit a full rental application with 3 key components. Okay, number 1, you want to have a credit check. Okay, minimum score 650. Okay, that's your minimum. Okay, obviously the higher the better. You're looking for background check as well. Okay, so you're screening for criminal history, sex offender, bankruptcy, evictions. You're looking for all that. Okay, and number 3, income verification. Require income of 3 times or more, and don't forget to confirm the employment. Okay, call previous landlord references. Call any type of rental history. Call those people too. Okay, verify the amounts. Decline those applicants who don't meet your income, credit, and background criteria. That's it. Stick firm to your standards. It'll reduce the defaults, the breaches, and I'm telling you, it's gonna save a whole lot of headaches. There are people I know that the person will beg and plea and beg and plea. Finally, they relent to let them in. Next thing you know, 6 months later, they're praying to get them out there. They're just, it turns into a really bad time. Okay, and I know you feel bad when you're talking to an individual, if you're self-managing especially. Try to have property management do this part if you're really a softie in that regard, because if they're begging and pleading to get in to your unit, chances are they got nowhere else to go. And if they're desperate, there's a reason why. Maybe they have an eviction that's pending and they need a place like right now, and the eviction hasn't hit yet, hasn't shown up in their background check. If someone says they have to move in and that day, or they have to move in within a 2-week period or something like that, again, chances are there's some sort of eviction taking place. And if someone has an eviction, you probably don't want to have that individual move in. Why? Because if they already did an eviction once, they're going to do it again. Okay? Just be aware of that. Okay? So what else can you do? Offer those flexible lease options that are tailored to your target resident's needs. So let's say, for instance, you have your standard 12-month lease, which is great. Maybe for those that are seeking some sort of stability. Maybe afterwards, you might want to do a month-to-month agreement to allow for more flexibility for some of those folks, depending on where the asset's located. Maybe it's in a hot market where it's somewhat transitory, or you have also, maybe there's a popular hospital or something like that nearby. Maybe it's a 3 to 6 month lease for short-term housing, and that maybe it's a place that's already has outfitted with all the furniture and everything else like that, almost like an Airbnb model. Again, depends on where it is, and also depends on if Airbnb is even legal in some of those areas. So again, make sure that's a whole different discussion. But again, before you can even consider that, make sure you can even actually do it. Okay. Now you can also accommodate pets. Okay. If you're going to do pets, you have those pet deposits. You get the fees. You could do that kind of thing too. If you can also offer units for temporary renters, like I said before, or if you have a scenario where, let's say, you can have a unit that someone can rent by the week or by the day even, right? Maybe the residents have some friends or family or whatever that wants to come in and stay, rather than staying at a hotel, they can just stay on site, right? So that's another thing you can do too. And the tenant gets a discounted rate or something like that, because they don't have the room in their own unit. Plenty of ways to provide benefit to the people living there, okay? You have corporate leasing as well for traveling business tenants. Again, depending on the asset, where it's located, it works out very, very well in that regard, okay? But having those diverse lease agreements will cast a wider net to find qualified residents. So again, be sure to consult an attorney to ensure your lease terms comply with the local laws, okay? Both state, federal, even down to the county, okay? Some counties have very, very different types of laws, so you make sure that you're following all the rules there. Anyway, what you're looking to do though is retain good tenants. You want to minimize turnover, and you want to offer some nice renewal incentives, okay? So what does that mean? Maybe you do some benefits for on-time renewals. Maybe you have some sort of waived or reduced fee. You have free rent for a month or two or something like that. Gift cards for signing up early. capping rental increases below the market rent. There's various ways of doing that to really incentivize the individual that's living there to stick around. Because again, you may give them a discount on the rent for, let's say, for another year, but you're better off doing that than dumping in another $3,000 or $4,000 or $5,000 into the unit right away, only to rent it out again for the same amount, right? It's not worth it. You want to keep the individual there, right? You want to keep them there. But these incentives, they encourage tenure and help maintain continuous occupancy. That's what you're looking to do, okay? What else can we talk about? Local market expertise, okay? So keeping a pulse on your local market is absolutely crucial to maximizing occupancy and rents, okay? So I touched on this before. Regularly reviewing the market reports that aggregate key real estate and multifamily metrics in your area is tremendously important. So there's CoStar, there's RealPage, there's Yardi, the Yardi or Zillow's rent index to monitor all these things, okay? If you don't have access to those, to CoStar, RealPage, Yardi, you probably don't, right? You may not. Those are tremendously expensive. The cool thing is that either your property manager might have it, more than likely, or if you're friends with a commercial broker, they can get you access to that kind of stuff. I mean, they can't just give you their username and password, of course, but depending on what it is you're looking for, they may just run a report for you, right? So you can keep an eye on what's going on in the market. So what exactly are you looking for? Maybe you're looking for occupancy and vacancy rates. Maybe you're looking for what the rent growth is of a certain market. Maybe you're looking at the new construction pipeline, what's going on in construction in that local area, right? But what you're looking to do is you're looking to compare your property's performance to the broader submarket. So if your occupancy or rents fall below the average benchmark, you want to inspect your asset and refine your strategies to maintain and remain competitive, okay? You're also looking at rental rates and any features that keep you in line with your competition as well, right? Because again, people have choices, right? What does that look like? Even if it means driving to other neighborhoods, looking at what they're doing, identify the upgrades and other things that maybe they're doing that you're not, and maybe you could match it, right? Maybe it's a splash of paint, maybe it's an updated sign. It could be a lot of things, right? But looking at your competitors to ensure that your asset attracts a great tenant and you can offer a better value proposition. Okay, so look for opportunities to adapt your strategies as market conditions evolve. Right, so look at high occupancy. Okay, in high occupancy, low vacancy markets. All right, focus on pushing rents to maximum without sacrificing your tenants. Now, in elevated vacancy markets, okay, invest in value-add improvements and amenities to retain an edge. So what you want to do is promote move-in concessions, if needed, to fill those vacancies, okay? So again, stay alert to the demographic shifts and the changes in renter preferences that may require you pivoting your approach, okay? So let's say, for instance, there's an influx of millennial renters and they want more community events and high-tech features, okay? Give it to them. Maybe you're appealing to the baby boomers, right? Maybe they're downsizing. That means you have to have accessibility upgrades, all right? What do I mean by that? Like maybe you need some sort of the tub with a door on it. Maybe it's maybe it's more handles. Maybe it's wider doors. Whatever the case may be, right? But making sure that you're fulfilling the needs of the demographic that you're looking to attract. Okay, so keep a pulse on those emerging trends. Keep a pulse on your competitors' offerings, and market benchmarks to enable you to adapt in real time if you have to optimize occupancy and financial returns, okay? You're doing this, a good property management company is going to do the same sort of thing, okay? This is why I'm really big on having a local property management company, because they're going to know what's going on in that market, They know the tenants, they know the demographic, they're aware of it, all right? Not a fan of the out-of-state property management companies because they just don't have the connection to the local market, okay? So, in summary, and we talked a lot today here about maintaining the tenant, all right? Maintaining your community. There's a lot to it. It's not easy, but you know what? If you can build out the systems, you get some great management, and you build out the processes properly, it's a win, okay? High multifamily occupancy requires both science and art. Combining data-driven management with creative marketing, customer service is a real big deal. Because again, I'm not saying that we're in the hospitality business, but there is an element of that when it comes to multifamily, believe it or not, okay? So what are you looking for again? To sum it up, monitoring physical and economic occupancy metrics, providing competitive in-demand amenities, creating compelling and honest marketing, maintaining an aesthetic interior and curb appeal, and prompt maintenance communication as well is very key. And of course, managing your pricing is going to be key as well. So making some small operational adjustments can make a major financial impact over time. So consider which ones really align with your property and align with your asset. That's all I got for you guys. If you're interested in leveling up your game, go ahead and check us out on bulletproofcashflow.com. We have 2 masterminds out there for you, okay? The Multifamily Advantage helps you get into real estate, into multifamily if you've never done it before. It's a 50-week mastermind, okay? That's what that is, all right? We have all the coursework. We meet and we talk about everything from real life case study to how to raise money to how to get the financing to how to find the deal to underwriting, the whole 9 yards, okay? The Multifamily Accelerator, multifamilyaccelerator.com, something similar to that. The difference is we're talking about doing next level stuff, syndication, raising capital, and of course, doing everything I just mentioned before with the deal underwriting, 50-week mastermind in person, delivered by yours truly, right? So if you're interested in leveling up your game, go ahead and check that out, bulletproofcashflow.com. All of our stuff's out there, okay? Otherwise, just reach out to me, okay? And we'll get in touch with you, all right? Hopefully you have a great week, guys. I will talk to you again soon, all right? Take care.